afternoon. Good afternoon, everybody. How y'all doing? I ain't gonna hold you. I'm dog. New member, Rocky. Is that you, Rocky? Is that you, Rocky? Rocky, is that you, Rocky? Is this the same Rocky? Please, Michelle. Is this Rocky? Is that I got to find. Oh, I closed the Discord. I closed the Discord, so I can't. I don't know if that's Rocky. Is that Rocky? I'm live on Instagram. Is this a coincidence? Is it a coincidence? Oh my goodness. Oh my goodness. This guy. Welcome. Welcome. If you're Rocky, if you're not the Rocky that we think you are, I jollifies. Either way, welcome, Rocky. Welcome. And if you're not the Rocky who we think you are, then whenever we do things for Rocky, just know that it's not you. But welcome. welcome. What's up? You say you got an Instagram notification? Okay. That's what's up. It would be, boy. If that's the same Rocket, I hope that's the same Rocket. Hey man, I just woke up, and that's the best thing. That Rocket, signing up, and that being that if that was Rocky or not. That makes me think about Rocky. That's the best thing, man. How y'all doing today, man? How y'all doing today? Let me see who in the chat, man. We got Michelle Tucker. What's up, Michelle? We got Thomas up in here. I've never seen that name before. Welcome. If this is your first time tuning in, welcome. Appreciate you for hanging out with us. I have never seen that SoCal native before. I see you got look like the Charger shoes on. So I'm assuming you're from Southern California with SoCal native. I appreciate you, Rocky, for joining the membership. What's up, Lewis Mitchell? What's going on, KC? What's up, Sonia? The Blackout Davis say he got the notification. What's going on? Hey, did you ever get that thing right? Did you get it right? I see it's purple now. Was it supposed? No, it's supposed to be blue. It's supposed to be blue. Did you ever figure that out? Let me know if you figured that out. Simone, let me know if you figured that out. And also, was you able to I sent you something on Instagram asking you if you was able to access that video too. Let me know if you was able to access that. Right. Did you give Tim advice a couple? Yeah, Rocky. Was that what's up? Peace, Rocky. Raiders are losing again. Might as well learn how to make it. I don't have a pro team. You didn't get it worked out. I hate that. I see it's purple. I know it's supposed to be blue. Were you able to access that video? I sent you. I tagged you in that private video. Were you able to open that private video? Did you get that email for the private video? What's up, Kenya? How you doing, Kenya? Am I freezing? Am I freezing, y'all? Or is that Simone internet? Am I freezing? I'm good on this side. Let's get into it, man. Okay, that's good. Okay, that's good. What's up, Deborah? able to catch a small piece of live on break at W2. All right, since Deborah on break at W2, let's go ahead and get into it and stop messing around. What's up, Kim? How you doing, Kim? I'm Rocky. Say I'm not freezing. Rocky, are you the? Oh, let's do this before we get started. Rocky, are you the Rocky who pulled up that time and was like, I can do this if I act more professional and stop all the joking? Are you that same Rocky, or are you a different Rocky? If you're that same Rocky, that would be super cool. But if you're a different Rocky, it's still super cool. But are you that Rocky? Because it's like I've been shouting you out almost every show if you're that Rocky. But just let me know. Are you that Rocky? I'm new and approved to lie. Hollered at you. Emailed a couple weeks ago. Finally got notification set up. Okay then. I don't remember that, but yeah, I appreciate you for pulling up. Now, let's get into it, man. I came on today to do some chart prep. I was just gonna do chart prep with the channel members. But I said, you know what? I didn't get a chance to go live on the other day because somebody reached out to me and asked me if I could do a video on Judy swings. And so I'm going live to do my chart prep, and I'm going to talk about Judy swings in here. I think it was Alpha. I think Alpha was the person that asked me to talk about Judy swings. So I'm going to talk about Judy swings as after I do my chart prep. So since Deborah is on break, we're going to do the chart prep. Y'all look at this. I was at church today and I was getting ready to edit the video, and I opened up my I edit the video. For those who don't know, I edit the video for our TV program at church. And I opened up my phone, and while I was waiting on my computer to render the video, I had started doing some stuff on my phone, looking at the charts on my phone. I mean, service was already over. We were just going through like the wrap up stuff, like reading the prayer requests and announcements and stuff like that. So, and I was looking on my phone to see where we were in there. And I stopped out because I was like, I'm gonna do a chart prep video today. So that's all I did. I just stopped right there. So let's go ahead and do this real quick so that Deborah can get back to saving lives. Deborah is a registered nurse. Deborah saving lives. The rest of y'all, her name Deborah, but I say Deborah. Monthly chart is what we are. I'm watching this order block right here. I'm watching this order block and the wick of this order block. See that on the monthly so far, we've come down to the wick, to the cusp quit encroachment, of this wick right here. We've also come down to this breaker, right? We got a lot of congestion right here on the monthly. Again, we was talking about this is a bullish retracement on the monthly. What makes it a bullish retracement for me? This right here. We got a break and market structure right there with the June candle. The June candle gave us a break in market structure. What makes that a break in market structure? This high on this leg came down and took out that low, right? So that high took sell side, right? So this high took sell side. So once this high took this sell side out, right? That right there is now external liquidity for this price leg right here. Let me turn on my fancy dancing so y'all can follow the bouncing ball. So from this August high down here to this September and October low, right? This is a price. This is its own price leg. This high came down and took out a low, made a new low. So when price consolidated here, we started consolidating. And then you know what happens when price consolidates? It's engineering liquidity, right? And then we got expansion with displacement. How do Timmy Rogers identify if it's displacement or not, if it's institutional sponsorship or not? There will be an imbalance left behind. That imbalance right there, right, qualifies this right here as displacement. That imbalance right there lets you know that this is a order block, right? That's an order block. This right here is an order block. What makes this the order block and what makes this the order block, right? This, Kenya, thank you for joining the membership. Thank you for joining the membership. This high to this low, we've come down to an area of anticipatory reactions. Y'all remember anticipatory reactions? We came down to an area where we anticipated price to do something. Once that means we've came down to an area of anticipated support. Once we did that and took these lows, right? Once we trade back up past these down close candles, see, these are the last down close candles that came down to the area of anticipatory actions, right? So once we traded back above the opening price of these two down close candles, that made that an order block right there, right? Because we came down to an area of support, an area of anticipatory reactions, an area of whatever you want to call it. We expect price to do something, then we traded up through it, boom, order block. What makes it an order block? We traded back up through that price and we left there with an imbalance. Order block. Now, move over, we're consolidating right here, right? Once we poked above that right there, technically it's already an order block. It's already an order block because we're anticipating price to go back up. So as soon as you poke above that, in your mind, you can make that, okay, that's an order block already, right? But this is what validates it, confirms it as an order block. What makes this an order block right here? Because we've been chopping, right? We're inside the order block right there. And at consolidation, when price expands away from a consolidation, if it expands upward from the consolidation, the last down close candle at or near equilibrium of that consolidation, right? Right there. Oh, wait a minute. Right there is equilibrium of that consolidation, that last down close candle before the expansion at or near equilibrium. Well, that's a order block, right? That's an order block. And so that order block coming into this order block, you know what I'm saying? That's technically a propulsion block, but it's a type of order block. So it's an order block. Now that we've did all of the educating, now we've come back down into that order block. We're at the sensitive area of it right there at consequent encroachment of the wick. This is the order block price right there at 41.8925. What's up, Laverne? 41.8925 is the price of the order block. So that's the price that I'm watching to the downside for this monthly candle here. For the bullishness of the monthly to stay intact, right? I really want to see it respect this wick of this order block and that 41.8925. These are monthly candles. So you got to remember, when I'm talking about these prices and these levels on the different time frames, these are the candle closures on that time frame is what I'm talking about. All right. Don't get excited and say, like, hey, Tim said the monthly bullish, so I'm gonna jump on the daily and start buying. No, just understand. This is for the monthly. It take a long time for a monthly candle to play out. Okay, we got 7 more trading days in October to see what's going on. So we got 7 more trading days to see if we're gonna respect this order block right here. We've come down, we got a breaker, order block, order block. We got a lot of congestion right here, and this is a balanced price range. It takes a lot for price to force its way through this right here, especially when institutional sponsorship has become involved. Now, if there was no institutional sponsorship to the upside, then you can expect price to cut through a balanced price range like butter, like if the institutional sponsorship wasn't to the upside, right? You could just anticipate this to be a Judas swing, go up and then cut through this. But since the institutional sponsorship has reared its beautiful head, right, we can anticipate this order block protecting this move back up to these highs on the monthly basis. Because once the institutional sponsorship gets involved, the algorithm leave clues in place where you can say, hey, this should protect this up move, right? And this is what we're looking at. We're looking at this order block right here. We're looking at this order block right here. We're looking at this breaker right here. And if you notice, if I put my crosshairs on, that's where we are right now. We're at the breaker. We're at this order block. We're in the wick of this order block right there. So we want to see this wick and that opening price be extremely sensitive. You know, if we get a monthly closure below that, and then that's the mean threshold of that order block too. If we get a monthly closure below that open, because the mean threshold is 41.8675. That's the mean threshold of that order block. All right, so if you get a monthly closure below 41.8675, then this order block is showing potential weakness. Not saying that it's done, but it's showing weakness. Because when price is exceedingly bullish or exceedingly bearish, you want to see it not even make it to mean threshold. And if it touches it, you want to see it repel it, like bang, like get away from it. You want to see it repel it. That's what you're looking for. That's what you're looking for on the monthly. The monthly. All right. Weekly. Let's get to the weekly. Oh, I put my weekly line in there and everything. I did a lot of stuff when I was in church. Okay, so on the weekly, you see our order block price down there. So our order block price on the weekly, the opening order block price on the monthly, I mean, is at the low, right around the low of the second candle of this weekly order block. We got a weekly order block right there where we came to it here and repelled off of it. And then we pushed back down to it again. We just kind of melted down on Friday. It wasn't like a tear off to the down. We just melted down all day and we closed, boom, right down there, back there at that order block again. Right back at the order block again. So the weekly is still respecting the discount PD arrays. Remember we talked about last time, we said the weekly was showing signs that it want to get on board with the bullishness because it's respecting the discount PD arrays, meaning it's, when it come down to a discount PD rate, it's not tearing through it. It's hitting it and backing up off it, hit it, back up off it, right? And here we melted down and we closed where? Boom, right there. So we're there now. So now that we're there, I would love to see it come down. If it's going to get aboard with the bullishness right now, I would love to see it come down, hit this, and start to move back up. Now, what would be really, really nice price action is if it came down and took care of these imbalances down here since we're there. All right, since we're here, let's go ahead and take care of these imbalances before going back up. Let's do that. Stop playing games. Take care of it. You came back down here for a reason. Come on back down here and let's take care of these imbalances right here and stop playing games. Right? Stop playing games. You got that that weekly imbalance right there. You got a piece of a BISI that we never finished. So that's the entire BISI right there. But we did take care of part of it back here in April and May. We did come take care of part of it way back in April and May. And then we also got volume imbalance in between the March and March 20th and March 27th week. Right, but more so, I would love to see it come down and take care of that before proceeding back up if it wants to get on board with the bullishness. Right, this right here is a lot of congestion in here. All of this right here is a lot of congestion. This is that monthly balance price range. It's a lot of congestion in here. So if we don't come down and get that, that's all well and dandy. Let's look at the continuous contract real quick and see what it looks like around this week right here of the 27th. Let's see if that is actually there on the continue. I like to use the front month, but let's go to the continuous contract and see what that looks like. That same area. Okay, so on the continuous contract, there's no fair value gap there on the continuous contract. All right, so the price may be happy with this area there. There is a volume imbalance on the continuous contract right there. So the algorithm may be happy with this area because, again, the continuous contract smooths everything out over all time. The front month is just the most current. So when I start getting into action that's like way back like this right here, I always look at what the continuous contract look like, because for the front month, I really only pay attention to the price action that has really been in effect when we start getting really close to the time when contract changeover time was. Like whenever contract changeover time was, do they still show that once you change the contract? All right, contract expiration. See, this right here, this one is going to be up on December. So when did the other ones expire? Like back in September sometime? September. Yeah. So if it expired back in somewhere around mid-September, so it'd be like the third week of September when it expired. So when we start getting a little bit too far back, you know what I'm saying? We start getting a little bit too far back here when the price action start looking real sketchy like this. See how the price action starting to look real sketchy? Because this contract didn't have a lot of volume back then, right? This wasn't the active contract. So a lot of these gaps and stuff like that, when you start getting too far back, they may not be real gaps because the contract wasn't being like actively traded like that. It was just somebody getting way ahead of the game. But again, I would love to see us take care of that on the weekly. If it is, two reasons why, because that right there would be, if you look at this market maker sell model right there, this right here can be an original consolidation. You don't always have to get below the low of the original consolidation. All right, we can go below that low right there and very well take off. This would be the low under the original consolidation. You don't always have to hit that low. We've gotten back to the original consolidation, which is right here. We've gotten back to that, and it's an order block right here. And this is when the institutional sponsorship stepped in. So that order block's job is to protect the price in that place right there. So just watching that. Just like to share my thoughts on everything that I'm looking at. We got a weekly SIBI that we went halfway through. Right, we went halfway through up to this bearish order block, hit that, boom, came back down. Now, boom, we've hit a bullish order block. So we're again, we was talking about on the weekly, we were in the middle of the road. We was in the middle of the road. There were several reasons why we was in between the tail of two cities. We had some liquidity voids here, liquidity voids there, and we got bearish order blocks there, bullish order blocks here. We're in between. You know what I'm saying? It's high resistance right now. This order block price to keep price down. This order block price to keep price up. And we're in between opposing PD arrays on the weekly, right? Be careful about that. For the weekly, I marked previous week's high and low. That's what I just marked out. That's where we are. Looking at how the weekly trade. Let's look at what the weekly candle has done. We did not take out the prior week's high. We did take out the prior week's low. Right, we came down to the order block. So since we closed on the low, right, you anticipate price to take out this week's low, right? Because we took out the prior week's low and then we closed near the low. So when we take in any with any candle, any time frame I'm looking at, if we take out the low, don't reject it, close below it, I anticipate taking out that low. So anticipating taking out that low. What I want to see once we take that low out, since we're at this area where it's its job to keep it up, I would like to see us come down, touch the order block, go up, or at least or come down, hit this fair value gap. May or may not be one. The continuous contract, there's no gap there. That gap has been filled. With this candle here filled the gap. Well, it was either this one or that one. It filled the gap. Right. So let's see how that plays out. That's all I'm going to mark on the weekly thus far. That's all I'm marking on the weekly. We're at an anticipatory reaction point, right? Since we've come to a weekly anticipatory reaction point, right? We've come to a place where we're at a weekly order block. We're expecting price to do something. See, last time we came there, we was expecting price to do something. What did price do? Price went all the way back up to this weekly fair value gap right here. Pushed all the way up to the mean threshold, all the way up to this weekly breaker. So now we've come back down to this same area, right? You've come back down to the same area. You say like, hey, Tim, you're coming back to this order block again. Okay, so the first time, this when you go to the PDub chart. So we come down here to this order block right there. The first time we reject up. Right, so you look and see what else we got here. What else do we have here? You come over here, we got us a mitigation block right there. We got a bullish mitigation block right there. So when it came down this time and rejected back up, it's very well it was coming down to the mitigation block, because on the PDub chart, mitigation blocks got a higher priority than order blocks. You got mitigation blocks, you got breakers, you got, let's pull up the PDub chart so we can see exact the order of operations. I ain't gonna try to sit here and act like I know it off the top of my head. I just used the PDub chart in the thing that I did yesterday. So boom, there it is. We got mitigation blocks, breakers, liquidity voids, fair value gaps, order blocks, rejection blocks, old highs and old lows. All right. So mitigation block is the higher in priority. So we came down this time. It very well could have been bouncing off that mitigation block. Right. Could have been, now that we're coming back down, now we can be coming back to the order block. Since, you know, order of operation, come down, it's mitigation block there, push price back up, hit this fair value gap, push back down, boom, it's an order block there now. So boom. So now that we've come back down, now we can be coming to the order block. So now that that's talked through on the weekly, let's look at the daily. We've come to an area of anticipatory reaction, right? We've come to an area of anticipatory reaction. So now that we have come to an area of anticipatory reaction, right, we can look at price from this high to this low right here. Right, look at price from that high to that low, that price leg right there. Change this to blue. Right, that area right there. And if for the week, we've come to this area on a weekly time frame, so we can look at this area right here. And if price in this area here comes down and sweeps below this low, and whatever it does anyway, like if this price leg here stops here or keeps sliding down, we can look at this price leg, and if we start to get a reversal anywhere in between this area that we're looking for price to react in some kind of way, right, once we get a break in structure to the upside on this price leg, right? Let's just say we did this right here. Let's say we came down, hit the order block. Let's say we came down here, push back up, hit the order block, then push back up. All right, like that. Let's say we did that. Now we can anticipate a market maker buy model to bring us back to this original consolidation and attack that daily SIBI up there. Since the weekly has come down to an area of anticipatory reaction, once it give us a break in market structure back up, we can anticipate this becoming a market maker buy model and taking us back up to this original consolidation and attacking the rest of this daily BISI right there that we did not finish off. That's just the kind of stuff that I be keeping tucked in the back of my noodle while I'm watching price play out, while I'm making my decisions throughout the day. On the daily, we got our daily high marked out. Oh man, I did a lot of stuff in church that I did not know I did. Got my daily high marked out. That's my weekly high, my weekly low. I didn't mark out the daily low because it's the same as the weekly low from last week. There is sell side right here. Again, remember when I was saying I anticipate that weekly low being taken out quickly. Right? If we look right there, there's sell side resting right there below 42.3550. Right? 42.3550. And then this low right here is at 42.4350. All right, so that's 8 points. That's 8 points difference between the low of the week and then that swing low right there. So we can anticipate that being taken out relatively quickly. So boom, we hit that. Let's just say this weekly fair value gap is really not a real gap. We hit that, come down there, touch that order block price and get a reversal signal right there, get a bullish break in market structure. After hitting that, then I would anticipate this becoming a market maker buy model and looking to take it back up towards these this original consolidation, taking out that buy side and attacking the rest of that fair value gap right there. Yeah, I'm daily marked out already. So yeah, that's it, man. That's it. Got really don't need this on there no more. Really don't need that on there. You see, it's not. I don't even have it marked out with anything. I just had it there for a visual when I was on my phone. So I really don't need that on there no more. I could take that off. And yeah, that's it. That's all I'm gonna do for my chart prep. I'm not gonna go any lower time frames than that. Not gonna go any lower time frames than that. In the morning, I'll probably jump on, depending on what the market does. If the market do something, get animated like during the London tonight, I might jump on with the gold and platinum. All right, I missed when she said a break was over. Hopefully you got it. Got enough of your feel. If the market get animated during London, I might jump on in the morning with gold and platinum members and talk about what price did overnight. Thank you, Kenya. Thank you, Rocky, for joining the membership. Do anybody have anything for me before I call it? Did anybody in here? Did y'all watch the part 5? Did y'all watch part 5? Anybody in here? Did you watch part 5? And if you did watch part 5, do you have any questions? Say yes, and then have your question if you got it, or say yes and whatever feedback you got. If you didn't, say no. But did you watch it? I appreciate that. All right, Michelle, take it easy. Appreciate that, Rocky. All right, you looked at it, Laverne. Got any questions? Anybody? If anybody looked at it, do y'all have any questions about it? Oh, I probably been talking about the Judy swing. I probably been talking about the Judy swing. Let's talk about that. Let's talk about that. Alpha, if you made it this far, if you made it this far and didn't click off, here's the watching part 5 tonight. Okay. Alpha, if you made it this far, I'm gonna go down to like an hourly. Let me go to 15 minutes because it's easy to show PDub. It's easy to show stuff on lower time frames because they happen more frequent. All right, they happen more frequent. But and then let's do it in relations to like times, price, because it's all about time and price. You want everything to be about time and price. So let's find a London session. You want everything to be at time and price. Let's find a London session. So we're gonna go, I should say 1:30 on this Tuesday to 5. Mark out the kill zones. We're gonna go from 1:30 to 5, and then we'll go 8:30. We'll go 8:30 right there. It's really like 7:30, but since I trade the ES, I always look at 8:30 because that's when the news embargo lifts, right, until 12. And then we'll go, you know what? Instead of doing these lines, because that's just going to get confusing for everybody, I'm going to do rectangles. Okay, 1:30 to 5. 1:30 to 5. Rectangle, tangles. All right, we're going to make the London blue. Rectangle, tangles. All right. So this is the London kill zone. London kill zone. And then we're going to copy this over. Going to move this over to 12 p.m. right there. 12. We're going to go from 8:30 to 12. Right there. It's really like the kill zone for ICT really starts at 7:30 right there. But I always look, I'm going to put it at 7:30. I always look at it from 8:30 because I trade the indexes and that's after the news embargoes. So I'm going to put 7:30 to 12. And then I'm going to come over here to 1:30 to 4. All right. The last hour is within here too. Now, I ain't worried about the Asian. Don't really trade that. You got an Asian time frame too. But this is the London and the New York, right? This is the New York morning, New York afternoon, right? These are the dead periods in between there and then the lunch, right? You can trade in there, but that's just when the algorithm is not as active, right? This is when the algorithm is not as active. Okay, let's look at this right here. So when it comes to the Judy swing and any other, y'all know what? This is what I'm gonna do. Since this video already 40 minutes long, all right, I'm gonna stop this live right here. Then I'm gonna jump back on in like 2 minutes and talk about the Judy swing. So it's a total separate video, and you don't have to try to scrub through. If you want to look at the video about the Judy swing, you ain't got to try to scrub through this one video to find when I start talking about the Judy swing. So if you want to hear me talk about the Judy swing, pull up in like 2 minutes on what's the name. If you don't want to hear me talk about the Judy swing, I appreciate y'all for hanging out with me for the chart prep. If y'all gonna trade this week, make sure you trade safe. If you're not gonna trade, please take a copious amounts of notes and study the things that you saw in the price action. Big Spider gone. Yeah.